So what does all this data and information mean for the investor? Well, it means that they have to decide whether they're looking for a value or a growth stock. These two are differing in the sense of value is looking for a dividend. They want steady cash flow and don't really care how the price goes. Obviously, they just want to maintain the cash flow. If someone's looking for a growth stock, then they're expecting the price to either grow or they're planning on shorting the stock because the stock's price is expected to fall. So making this decision is one of the very few things that the investor initially has to decide. Another factor for investors to consider is the current state of the industry. For this, it means what are the threats, what are the opportunities, what things are going to help the stock's price and which things are actually going to hurt it. In the case of Mondelez and Nestle, opportunity is natural and organics. People are a lot more health conscious and want to see that sugary snack foods like these companies produce are making an effort to try to give options of healthier foods. And with that comes the threats of new entries that might already have a market share of that organic or natural food industry. And so they're just having to manage that risk. And for an investor, that means that keeping an eye out for new emerging companies that have great ideas that aren't just fads, but will actually take over market share and affect the sales of these companies, which will drive down the stock price. Other threats to the stock price can be news of the corporations not being corporately responsible. There's been plenty of news stories coming out about Nestle and Mondelez that, like everything else, will affect a stock price. And so I think just as an investor, keeping an eye out for those news stories and making sure that you're watching your stock and deciding, is this the time to buy or sell? In negative news, it most likely is going to be a sell because you're not wanting that price to fall any more than it might already have. Also, being a multinational corporation allows for them to manage their exposure to the macroeconomic variable of commodities increasing. They do this by brand loyalty, maintaining quality products, and could even construct future contracts with these suppliers to hedge their risks. Going along with the idea of risk, with more risk comes more return. So what does this mean for the investor? It means that Nestle is less risky. It's less sensitive to changes in their price per earnings and earnings per share. And they have a dividend, and according to their growth rates, they are expected to do well. Mondelez, on the other hand, could potentially be a stock to short, but overall is not a current buy at its current price.